recording. Let's see.
Oh, I see it now. Recording.
Oh, good. Okay. All right. So, hi, everybody. I have Dustin Swigart. And I said your last name right. Swigart.
You did. Swigart,
okay.
yes.
And he is with Prime Lending. And he kind of has this little niche carved out for himself in the lending world, which let me tell you, I appreciate so much. And I'll share that story in a minute. But I want you to at least give us a little bit of a background about who you are, how you got into the niche of the 203K loans.
Oh, yeah.
So some people may not know what a 203K is, but I had firsthand experience when I purchased my own house about 10 years ago. We were buying it as a rehab house. And then just recently I had a client who used a 203K to buy a major fixer-upper, and started with a different lender, but then ended up with you, and you saved the day and the deal and were absolutely wonderful, and you know this product inside and out. So I want you to tell us, first of all, what a 203K loan is for those people who are not familiar.
Yeah, some people call it 401K by accident just because it's very similar. But
I mean, I'd like to have money given back to me like that.
That's right. That's right. So the 203K has actually been around for a long time. And the actual 203K is just the section of the National Housing Act that created FHA in the first place. So you have different sections of the act, like 203B, that's your normal FHA loan. 203H, which is for presidentially declared disaster areas. 203C is for condos. And then you have 203K, which is your rehab and rehabilitation. They just have a bad stigma because a lot of them don't close, or the lenders that are doing them don't know what they're doing. And you got to have a lot of experience in them.
Yeah.
So essentially what you can do with
they're kind of convoluted and a little complex. I mean, it's not as easy as sending in all your information and, you know, like applying for a loan. There's a lot more to it.
There is, and you got to know exactly the steps and to be able to guide the clients and everyone involved through the steps to get to the finish line. And I did that through trial and error. I got into this doing rehab loans 15 years ago, something like that. I've funded somewhere around 1,600 renovation loans in my career. That includes 203Ks and other rehab loans that are out there.
That's a lot.
And all those years ago, I decided I needed to do something. And it was really weird. What came to me was this: how could I make my competition a referral source? Yes. And so I started figuring out, okay, what kind of niche loan can I get into that no one would like and would just send me the loans? They would send me to do them.
So you're taking the toss-offs. You're like, oh, nobody hates these. I'll take them.
I'll take them. Right. I'm like, everyone's running away from them. Let me see what's going on with these. Yeah, and as I got into it,
a lot of these big banks, like, and I mean, I don't want to say any of the names because I don't know for sure who does and who doesn't, but most of the big bank names will not touch these at all.
That's right.
Right. Yeah. So you have kind of carved out this little niche because the people who don't do these type of loans, these other lenders refer it all to you.
They do. I have loan officers competition that refers me these loans.
Awesome.
But here's the thing that I do in reciprocation is that if that client, let's say they refer me a 203K, if they don't go renovation, let's say they flip back to a regular loan, I send that client back to the referring loan officer. Or if they ever want to refinance and do a regular loan, I'll send that back. And that's just an integrity thing. That's part of who I am and my character, because I want them to trust me.
Right. It keeps that line of, not only the line of communication open, but keeps that relationship open, because then that person's going to continue to send the loans that they don't do and they hate and you love.
Right. Exactly. They don't think I'm going after their realtors or their clients. And I tell their realtors and clients this: hey, such and such values the relationship so much that they sent you to me to take care of you on this loan, because they don't do them or they don't specialize in them or whatever the case is. So it's a relationship. It's kind of like having a relationship with other referral partners.
Yeah,
just,
absolutely.
You know,
But with this 203K loan, where you've kind of carved out this niche among lenders, I mean, you do get referrals from realtors too, but a lot of your referrals come from other lenders. And it's for, you know, who is a good candidate for this loan and what would they use it for?
Really, anybody could be a good candidate. Right now in this competitive market, as you know, home prices are going up. People are overbidding. It's multiple offers. They're forgetting about all these ugly ducklings that have less competition, right?
Yeah.
So if you have that vision where I could buy a fixer-upper and make it the way I want, you would be a perfect candidate for it, because you can build equity through the renovations on these loans. Not everyone's going to close with this much equity, but I've had some people close with well over $100,000 in equity at closing, paper equity. from buying the home and then rehabbing it, and then obviously sets them up perfectly for the future if they ever go to resell or if they wanted to refinance down the road.
And this has
So
to
it's
be,
perfect for that.
these are properties that like people really do have to have the vision, and you can't just go in
Mm-hmm.
there and you're not the weekend warrior handyman who's going to come in and do a few things. These are like major fixer uppers. I mean, these are properties that need big time rehab. So you do have to have a vision, and you do have to have the ability to, you know, find the contractors, but you also can send people contractors. You've got like a team of people that you can refer also.
I do. Over the years of doing so many of these, I've kind of honed down a system that works. And so I've got inspectors, HUD consultants, contractors. I also have my team and assistants. We're all well versed on these. So it just smooths out the process. And so that's why people send me those referrals, because they know I'm going to take care of them and I can close them. I mean, what did we close ours? We closed ours in like 30 days, wasn't it? I mean,
Yeah, it was less than 30 days. Yeah. The only reason we had to push it off just a little bit is because the sellers of the property was in an estate. So there were a couple different siblings.
That's right.
And the one ended up in the hospital with something. So we had a delay because of that. But that was no fault of the loan or of the buyer or anybody. So, but
just one of those things.
With the 203K, like, how do you decide how much the property is worth? Like, how do you decide how much to loan on a house? Like, somebody's fixing, say they buy a property for $50,000, you know, it's a major fixer upper, but they know they're going to need 50,000 to rehab this. Like, do you loan 100,000? Like, how do you decide how to loan the money for this property?
If it's a purchase transaction, we look at the purchase plus the rehab amount. We call that an acquisition cost. So I'll give you a quick example. $50,000 purchase, $50,000 in total escrow. That's your bid, your contingency, rehab cost. So now the new acquisition cost to buy the home and rehab it is 100. We're going to appraise it as if that work was done. So they're giving it an as completed value.
Okay.
So let's say in this scenario, the value is 150. The costs are 100. And if we're doing a 203K, you know, the down payment's 3.5%. So it's going to be 3.5% of that 100.
Okay.
Not 3.5% of the 50 or 3.5% of the 150. Yeah. It's going to be of the lesser of those two, which is that 100. So they'll end up borrowing the difference. It's one loan. It's one payment. All the work is done after closing, and they have up to 6 months to complete the work. And if the work is a lot where they can't move in right away, we have the option on the 203K to finance up to 6 months of mortgage payments so that they're not making two housing payments. So let's say they're renting and they can't move in right away. Well, they don't want to pay rent and make a mortgage payment.
Right.
We can roll in those mortgage payments for them for up to 6 months, which is kind of nice.
Okay.
Yeah.
That's awesome. What a cool, it really is an interesting thing. I know when we bought our house 10 years ago, it was like, I didn't really fully understand it. And the person who I did the loan through also fully didn't understand it either. And it was right after the housing bust too. So there was like a lot of hoops to jump through.
Yep.
But when you're closing a loan like this, if everything goes, let's say everything goes smoothly, the buyers getting their documents in when they're supposed to, got the contractors nailed down, got the inspection all finished. From start to finish, what is the average time that you can close one of these loans? When we're saying best case scenario.
Oh, best case, you could do them in under 30 if they're turning everything in, get the appraisal back. On average, I tell clients and realtors, I tell them 45 days or less, because that's the norm. Because usually what happens is you go under contract, you have that 10 days for your inspection period, right? It's going to take them probably a week or two to get their bid, and then we order the appraisal once we have the bid. And then appraisals are taking a couple of weeks. So you figure you want to give them that 2-3 week time frame at the beginning of the process to get their inspections, and then go ahead and get the bid, order the appraisal, and then the appraisal comes back, and then you have enough time to do all the approvals that you need to do. The nice thing about working with us and the team is that we set you up in the beginning with an inspector who walks through and does the feasibility, who can tell you what's wrong, how much it's going to cost early on, and then that sets you up perfectly for the contractors to get their bids together.
Yeah.
And if you use a contractor,
all has to be done prior to the loan closing, is you've got to have and there's just a couple of inspectors who are qualified to do these types of inspections with this type of loan. Like, you can get any inspector you want, but it's most helpful if you have somebody who's what they say HUD qualified or
HUD consultant. Yeah, they
like
call them HUD consultants.
Right.
Yep, and I've got a couple I've been working with for a lot of years that are real experienced. They know exactly what they're looking for, and they've done enough of these, and they know kind of my system that they walk the client through the process.
Yeah.
So that's what's great, is that when everyone knows what's going on this end, and we're kind of hand holding everyone, walking them through the process, it's real smooth at that point.
Yeah. And I think, do you predict, I mean, and this is just your opinion, and we won't hold you to this, as we start going into, because what we're seeing now is the economy is great, the housing market is awesome, it's wonderful, but it can't be sustained forever. And there are a lot of mortgages that are in forbearance right now. Do you foresee that we're going to have a change in the housing market, where there are going to be houses that come up, that are going to be in foreclosure, kind of like we saw back in 07, 08, 09, those? Do you see that happening? I mean, in your professional experience in doing this and in seeing how the housing market is right now?
That's a great question. No one really truly knows, but I think we're going to see some foreclosures. I think the government's probably going to do something for these forbearances. But the difference between now and back in 2008, and I think I might be a little off on this statistic, but it's somewhere north of $3 trillion more in equity than we had back then.
Okay.
And so now what happens is, if people come out of forbearance and they can't renegotiate the plan, or they can't get caught up, they could sell the property. So that's going to bring more homes on the market and help us with the inventory problem. Will there be some that are going to go into foreclosure? Probably. I don't think we're going to see the crisis that we saw in 2007 and 2008, because the reason why we had all that going on is, back then we had all kinds of 100% financing options. We had subprime, we had
lenders out there.
Yes, no income, no asset, all those kinds of things that we don't have today. Exactly. I mean, back then they were doing cash out refis. You could do 125% loan to value on a cash out refi, because you would do a first mortgage and then up to 125% second. You don't have anything like that today. The credit quality is a lot better. There's a lot more equity in the homes now. And so if people do come out of those forbearances and they don't have a way to get caught up or restructure the plan, they could sell the home and even walk away with some money because of the equity.
So this, I mean, obviously you hope that doesn't happen to people, but we will see it. I think it's just consequences of, the housing market and COVID and lots of other things. But
there's always going to be some level of foreclosures. There's going to be some level, but to the extent of 08, I don't know if we're going to see that level.
But for those people who are maybe first-time investors, or they're looking for a fix-up type house, or they're just tired of competing in this crazy market, like this is such a good product for them, because it gives you the ability to buy that house that may not be livable right now, but is in maybe a great area, or it's on a piece of land that they're looking for, and they have the ability to really fix this house up and make it what they want, using a loan that's going to loan them on the after value of the house once it's fixed up. So it's awesome. It's such a good product, and I think just not a lot of people know about it. And I appreciate that you have carved out this niche, because you have been a godsend to my client and saved a lot of headache.
Yes,
so
I get enjoyment. I get enjoyment out of this very scenario, because I get probably 4 or 5 of those deals a month, where they're having trouble elsewhere and they find their way to me and we close them and everyone's happy. And I'm kind of saving the day there and giving people renewed hope on doing, renovation loans, because they do have a bad rap.
Yeah,
and you go
they
really
do. I mean, my own experience was really difficult. And I think had I had somebody who was more prepared to help me with it, it would have gone a lot smoother. And then same with my client, who then, once we found our way to you, it really worked out well. So anyway, we thank you. Well, Dustin Swigart, I appreciate all the information that you've provided.
Thanks for having me. Yeah, appreciate it.
I'm going to share your link to you and your website on this email. So for those of you who want to get in touch with Dustin, and he works for Prime Lending, then you can, if you have questions about 203K. You do other things too. You do other loans.
I do. Yes, I do other loans as well. And we do have conventional rehab options too. So you mentioned investors. We can do investment on conventional rehab, and we can do second homes as well.
Okay. So, this is great. Okay. So you definitely do have a niche that not a lot of people do. So if anybody has any questions for Dustin, I'm going to link you to him. And thank you so much for all of your help along the way, and for all the good information.
You're very welcome. Thanks for having me.
Of course.